I will dissect Michael Saylor's financial engineering and why people call strategy a Ponzi, at what Bitcoin price they will get margin called and go bankrupt. Then I'll discuss why they became popular and what happened to other similar companies who were issuing debt securities and buying assets. To wrap up, I will cover Saylor's questionable business practices in the past. Hi, my name is Zhenya. I'm a crypto investor and the founder of meme coin trading app ApeIn. Strategy was originally named MicroStrategy and was actually founded by Michael and a couple other guys in 1989. And for the long time, they were building business intelligence tool, and they still building it, and their main product called Strategy 1, and they have roughly 8,000 customers. They are continuing supporting it, and people actually leave positive reviews for this product. The customers are mostly enterprise companies. MicroStrategy stock pumped during .com bubble and went really high and then collapsed almost 90%. And nothing happened to the stock for a long time. And in 2020, we started to have crypto bull run when Bitcoin started to go up. And that's when marketing message changed for MicroStrategy, and they started to buy Bitcoin and issuing securities. As of recording this video, MicroStrategy changed the name to Strategy, and now they're issuing these securities to buy more Bitcoin. And to this day, they've issued these 5 different securities. Those are preferred stocks. So they are STRK, STRF, STRD, and STRC. MSTR stays as the regular share of the business. They are common stock, whereas all the other securities that are being issued, they are preferred stock. The difference between common and preferred is that if the company goes bankrupt, who gets the assets of that company first? The owners of the preferred stock get it first. However, there are lots of nuances, and that's where the Michael's genius financial engineering comes from. When the company needs to attract money, they can do several things, but the main ones is they can issue debt in the form of bonds. Those are usually have a certain period of time when they mature or expire. Let's say I just ask $100 from you, and I'll tell you that I will pay 10% on top. So in 1 year, I will return 110. So it has the amount, and it has time, and it has yield. And then there are stocks. Stocks are just shares of the company. If the company go bankrupt, you don't receive a certain number of money that you maybe bought that stock for, because the price is going to fluctuate. However, you will receive the rights for the assets that the company has. And that's mostly how the stocks are valued, based on the assets and cash flows and future cash flows. So you can see how bonds, they are very fixed because they have to have those requirements: the time, the amount, and the payback. The stocks is very volatile. It fluctuates based on the narratives, the earnings, and they don't guarantee your money to come back to you. And between the bonds and the common stock, there are these preferred stocks that also can have a yield. That's exactly what Michael's issued. All these C, F, D, and K preferred stocks, they have some sorts of the yield that is not guaranteed, but it's picked by the board. So strategy board gathers and they decide, okay, for this STRK, we're going to be paying 8%. And for the F, we're going to pay 10%, and then the latest, the one that Michael hypes up the most, STRC, they pay 11%. You might wonder why Strategy isn't just issuing bonds and buying Bitcoin with it. Well, because that's the Saylor's key thing in his marketing and how he financially engineers this whole thing, is that bond has the expiration time and it's not fun. You cannot really play around with it. It's very certain when the bond going to expire, let's say 5 years or 10 years, and the price for the bond fixed to the time to expiry. However, these preferred stocks, they don't have the expiration time. And at the same time, they have different mechanics to the common shares that I will discuss a little bit later. So he financially engineered these additional assets, these preferred stocks that are also called perpetual. And perpetual here means that there is no date to expiry. That's again what differentiates them from the bonds and different from the common stock. The other advantage of preferred stocks over common stocks is that when you issue new common stocks, you end up diluting existing owners of the common stock. So when Strategy went IPO, we have institutions, financial investment funds, pension funds, endowments of universities, they invested into the strategy or MicroStrategy. The ticker is still MSTR, and they own that stock. And also maybe the founders and management of the company, the owners and retail own the stock, common stock. And if strategy wants to attract new capital, they can issue more common stock, but that will end up diluting existing holders, all of the people and institutions who invested in strategy when they IPO'd. And that's not a good thing because the price is going to go plummet. If you own a stock and you invested $100 into it, and then the company ends up issuing more stocks, so now there is more stocks available to buy, value of your $100 gonna go down, and then you're not gonna like this trend and you're gonna sell that stock, triggering the event of many sales that will drop the price even more. So you don't want to issue new common stocks and buy Bitcoin. So strategy doesn't want to do that. That's why preferred are better, because when you issue preferred stock, it's an additional layer. You don't dilute the common shareholders, you just create a new asset holders, the holders of the preferred stock. So those are the advantages of preferred over common. So to sum up, how preferred are better than debt is because there is no time expiry. Also, the board can decide what percentage of the yield to pay, or they can stop it, cancel, do whatever they want. It's not fixed, it's not regulated. It's regulated and governed by the board. And also, it's better than common because you're not diluting the existing shareholders, so the price doesn't plummet immediately. If you're learning something new about various securities, how to dig into the balance sheets, and how to analyze stocks and various securities, please leave a like so that YouTube recognizes that and suggests you more videos on that topic. Now, the flagship product that Strategy and Saylor are marketing right now is STRC. It's offered 11.5% as of April 2026, and originally it was created in July last year in 2025. But it doesn't trade freely. Its goal to stay at $100, what's called pegged to $100. And how the board achieves that, if the demand for STRC drops and the price goes below $100, they will increase the yield. And that's why the yield was actually increased 7 consecutive times since July last year. It started at 9 and now it's 11.5. But if the price goes higher than $100, then the board ends up selling more STRC securities so that there are more supply of that asset, which causes the price to go down. And that's how the price always, the goal to stay at $100. But you need to remember that this 11.5% yield is not guaranteed. It's not like buying US treasuries that are 100 years old and basically back the whole US economy and history of the United States and backed by US Army. The STRC been around for about 7 months and we haven't even had a full year of their existence. Now you know what kind of securities Strategy is issuing, and you can see where it might be that weak point, that yield that they must pay, the 9, 8, and 10, and now 11% that they must meet at the end of every year. They have to find the money to pay all the holders. And let's not forget that they still have their IT business, their Strategy One product that they sell to enterprise. The 8,000 people, they continue paying them. So we can easily go into their filings and find out how much money they actually make with their IT business. And then we will dig more into how much money they attract selling their special securities. And you can find the filings in the Strategy official website. They're required to publish those because they're a public company. And you can search for 10K, that's the annual filing for all of their activities, statements, balance sheets. So you search for 10K, and this is the filing from February 19, 2026. And if we opened it and we go to page 92, there are lots of pages. So that's why I'm helping you to find exactly where to look at. So right now we want to find how much money they make from their IT business. And on page 92, this is consolidated statements of operations. This line, 2025 total revenues is 477 millions. These numbers are in thousands as specified here. Strategy makes 477 million per year from their IT business. Then to support Strategy as a company, we need to add up all of their expenses, and we're not going to take the losses that they incur from volatility of their Bitcoin. And Bitcoin will be also on the spreadsheet, so we don't want to take that. And to find how much they're spending on their company, offices, salaries, and to support the Strategy One and their business intelligence product, we look at the operating expenses, and we look at sales, research, and general administrative, and we add them up. So these three numbers. And the last one is unrealized loss on digital assets. That's the volatility of Bitcoin. So we're not going to take into that account. By the way, it's $5 billion, but you know, Bitcoin is volatile. If we add them up, we come up with 368 million. So we make 477 mil and the expenses is 368, which leaves us at 109 million profit. So just from the IT business, Strategy made 109 million profit in 2025. Now let's talk about the preferred stock, the yield that Strategy needs to pay to the holders every year. And we can find it on the same statement on the same page, page 91, and it's under dividends on preferred stock. And the number is 381 million. The number is in parentheses, meaning that it's a negative number. And it's a liability, it's a loss, it's the obligation that the Strategy has for the holders of the preferred stock. So you remember that we had a profit of 109 mil from the main activities, selling the business intelligence tool, and then you still have to pay 381 mil. So in total, Strategy need to find 272 million somewhere to pay to the preferred stock holders. And the kicker here is that that number 381 is only going to grow. And there might be things happening with their main business which will diminish their profit from 109, maybe less, or it might even grow, but it looks like that they're not very focusing on their main product, the business intelligence tool. And that number 381 only going to grow because all these additional preferred stocks, those additional securities are only growing. We can see that there is so many of them already, and there's very big chance that Michael will come up with a new securities. Now let's talk about all the Bitcoin that they've amassed. It's something about 5% of all the Bitcoin supply. And you can also find it in the balance sheet, exactly in the consolidated balance sheet, which is page 89. And right here you have digital assets. And the amount is 58 billion. That was reported December 31st, 2025. And we had 4 months since then passed. And the price per Bitcoin changed and the amount of Bitcoin that Strategy owns also changed. The latest reading of number of Bitcoin that they have is 766,970. And if we multiply it to the current price of the Bitcoin, let's take an average 68K, we have 52 billion. So back then in December, the price of Bitcoin was higher. That's why it's reported 58 bill. And right now it's roughly 52 bill, but that is a huge chunk, and that's their main saving account that they are continuing issuing debt against. On top of that, their Strategy and Michael don't want to be in a situation when they have to sell some of their Bitcoin to pay the yield on the preferred stock. So they have some cash reserves that they can tap into to pay for that yield. And you can see it right here, cash and cash equivalents, it's 2.3 billion. So let's keep all of that in mind because we need to see the full picture. In 2025, we remember that they incurred 380 mil liability that they have to pay to the preferred stockholders and only 109 mil from original business. So they had those 270 mil that they had to pay to the preferred. So let's just imagine that they don't attract any new money. The market stopped giving them money for whatever reasons. Then the cash reserves that they have, 2.3 billion, will last them roughly 8.5 years if they continue having only 270 million obligation every year. If everything stays the same, the yield stays the same, and there are no new securities and there is no increases of the yield. But if we look at the last year number for cash reserves, it's right here, December 31st, 2024, they had 38 million. So 38 million versus 2.3 billion. That's 38 million, it's less than 2%. Last year, they had less than 2% of cash reserve of that amount, which tells us that this number is not real. We cannot rely on this number and it's not stable, especially if you want to lock your yield for 1 year, but then the cash reserves fluctuate this much. So here you have it, the full picture. They have $52 billion worth of Bitcoin as of today price. They have 2.3 billion in cash reserves, and they have roughly 270 million that they need to pay every year to their preferred shareholders. And that number they only can cover with either issue new preferred stocks, which will come with their additional yield, which will increase to 270 mil, or they need to take money out of their cash reserves or sell a little bit of Bitcoin to cover that 270 million per year bill. In the last couple of years, there was a new term coined for companies like Strategy who buy assets and issue debt against those assets. And the name is Digital Asset Treasury, or DAT. And to analyze those debts and see how profitable they are, is it worth investing and buying their securities, there is a metric called mNAV. So NAV stands for net assets value, and that is the strategy's Bitcoin, and mNAV, it's market cap divided by the net asset value. So here we can calculate the average price for Bitcoin now is 68K, they have 766,000, and the MSTR price is 126 per share for one MSTR stock. And there are total 346 million MSTR shares. So the price times the shares, we will get the market cap. The value of Bitcoin as of now would be all of the Bitcoin times the price, which is 52.2 billion, as we discussed before. And then the market cap would be all of the outstanding shares, all of the common shares that Strategy issued, times the current price, which will be 43 billion. Or in other words, it's also the market capitalization for Strategy. So if we divide 43 by 52, we get 0.84. So what this metric tells us is the mNAV is 0.84. It means that there is 16% discount to all of the Bitcoin that Strategy holds. In other words, they hold 100 Bitcoin, but they are worth only 84 Bitcoin. And that is given today's price per Bitcoin and today's price per share. Once those numbers change, you can see that this formula will change as well. So 16% discount doesn't seem that bad, and we did all that research, and it's an opportunity, right? You're buying $1 for just 84 cents, and you will get the 16% plus you get the yield that Strategy pays on the preferred stock. But and you see that there is 52 billion worth of Bitcoin on their reserves, and there is 2.2 billion cash reserves to pay for the obligations. But let's see what else Strategy is doing. There are these reports, 8K, and Strategy has to publish them each time they do something with their common or preferred stock. And they are available, these reports are available on the same financial documents portal. And this one dated April 6. If you scroll down, you will see MSTR stock, 582,000 of MSTR stock was issued, and Strategy sold that stock. And also STRC stock was issued as well. And if we find there are lots of these reports. This one, March 23, 500 MSTR stock, March 16, 2 million of the MSTR stock, March 9, February 28, and that is just 2026, February 23. There are lots of these MSTR stocks, common shareholders just getting diluted multiple times a month even. And this is just in 2026, so February 17, February 9, January 31st, January 26, and the list just goes on, and that is just in 2026. So the common shareholder just getting diluted all the time. Same happens if we look at STRC, some of these reports, we'll see that in April 6, 2.2 million STRC was issued, nothing here. And then 11 million of STRC in March 16 was issued, and STRC comes with the yield, the 11% yield. So if you hold STRC and Strategy promised you 11% yield at the end of the year, you need to remember that multiple times a month you getting additional STRC issued. You don't get the diluted if you hold STRC, you get diluted if you hold the common share. But the preferred one, you also get diluted, not in a sense that there are more stocks available, but in the sense that there is more people who will claim the same amount of yield. And Strategy need to come up and find money to pay all those new people who buy the STRC. And of course, they use the money that they raise to buy more Bitcoin, but you can see how it might get dangerous because yield just continues to accrue and stack up again and again each new STRC is issued. And now you have the full picture of how they attract money and buy Bitcoin. So there is no margin call. There is no price for Bitcoin at which Strategy will get margin call and go bankrupt, because essentially they borrowing money from the retail, from people, from markets, and they have 11% interest on that on the money that they borrow. So their goal is they will be profitable if Bitcoin continue growing at least 11%. That's for STRC. If the Bitcoin grows more than 11%, then strategy is profitable. If Bitcoin doesn't grow more than 11%, if it stays below, then they just don't have money to cover for their existing payments. How strategy even became so popular and why this narrative became so prevalent in 2020 up until now. Originally, strategy play or buying those preferred stocks was a leveraged Bitcoin trade, and that's how TradFi, traditional finance, participated and got exposure to Bitcoin, because Bitcoin was not available in the regular markets. There was no clarity around it, there was no ETF, but Strategy was the first company who would buy Bitcoin, and those traditional finance companies, they would be able to buy strategy stocks and preferred stocks to get exposure to Bitcoin. And this is why it was a leveraged Bitcoin play. So strategy borrows money through the preferred stock, and then they use the money to buy Bitcoin. And that creates the assets and liabilities. Assets in this is Bitcoin, the one that they bought, and liabilities is the debt, because there's additional yield on the preferred stock. So let's say Bitcoin is valued at $100, and strategy holds both debt, the obligations to the preferred stockholders, and they have equity, the company itself that they have. And that would be $60 and equity is 40. That is how much money they attracted to buy Bitcoin. So let's say Bitcoin price goes up 20% and the price per Bitcoin is $120. So that is still $60 because the company issued those preferred stocks and the debt was fixed and locked at that moment in time. So the debt stays $60. However, equity, because equity is more complicated, it's all of the assets, liabilities, and the company value. Now the equity increased because the Bitcoin increased, right? Company owns that asset went in value, so company increased in value as well. So we see that equity increased from $40 to $60. And 40 to 60 is 50% increase. So you can see here how Bitcoin went up only by 20%, but the equity went up by 50%, and that's where you have your leverage. But it works the other way as well. If Bitcoin goes down by 20%, the equity goes down by 50%. And that is why TradFi was using strategy as a leverage play on Bitcoin. It was a corporation that was governed in the US laws. There were actual people, the CEO and all the board of directors. It was a US entity governed by the US corporate laws. So it was a convenient way to get exposure to Bitcoin and even have it in a leverage play. But since then, the Bitcoin ETF appeared, and now companies can just buy the ETFs. And if they want, they can use leverage. They can use 20, 50, and up to 80% leverage that their brokers can provide to them. They also just directly buy Bitcoin through Coinbase and Fidelity custodian accounts. If the company, for example, Tesla is another company that buys a lot of Bitcoin, they can just open a custodian account with Coinbase and buy directly Bitcoins. So they don't need to partake and analyze all this strategy stuff and ETFs. They can just have the Bitcoins on their own account that will be managed by Coinbase. Second reason why people continued giving money to strategy and buying these preferred shares is Michael became a leader of so-called Bitcoin maxis. He saw this opportunity after collapse of FTX that most of the crypto is different from Bitcoin. Bitcoin doesn't have the creator, it doesn't have some people behind them. There is a limited supply of 21 million. It's very structured. Every 4 years there is halving, and it's proof of work. You have to spend money on electricity to do mining to get new Bitcoins. That's how issuance happens. There is no updates, upgrades. There are no people again who can, no foundation, no investors to dilute your holding. So that creates this very specific asset, similar to gold. Just like gold is limited in earth, and there is a consensus that gold is valuable, and same consensus exists for Bitcoin. So Michael saw that opportunity and he became the leader of this Bitcoin maxis. They are openly against everything crypto because crypto, in a sense, now represents just unregistered securities. But Bitcoin is a commodity, and that's how it's identified by the Securities and Exchange Commission, which are two different things, commodities and securities. Commodities are more like wheat, oil. There is limited supply of it, and there is a certain utility to those commodities. In Bitcoin case, that is store of value. There is a consensus that it's valuable. You can take your wealth and store it in Bitcoin. However, now Strategy's marketing and the whole message starts to shift from Bitcoin maxis to yield, digital yield or digital credit, as Michael called it. And we didn't have these securities longer than a year. And like STRC only exists since July last year, and it's been increased 7 times the yield. What's going to happen in a year? No one even knows. And there is most likely chance that there will be new securities issued, the yield will be increased, and whatever you buy now, you just not secure what's going to happen in a year. Like, what about the holders of STRD, whoever were buying that asset? So the message is now being diluted between all this preferred stock, and STRD holders are probably wondering, why did I buy STRD if I should have buying STRC now? And I'm pretty sure that in a couple months, we're going to have another preferred stock issued with an additional interesting combinations, how to peg it to $100 or maybe not keep it at $100. Just the narrative gets diluted and it's not very good. In the last bull run, Strategy became the main source of good news. Everyone was waiting and worshipping Michael to buy even more Bitcoin. He will be publishing these tweets where he announces that Strategy bought $3, $4, even $5 billion worth of Bitcoin. And when you're buying this much, you're gonna affect the price. And it's possible that the reason why Bitcoin even went to $120,000 per Bitcoin is because Strategy, they were buying this much. And of course, if your whole portfolio or whatever you have in crypto depends on one single guy buying and publishing new tweets, you're gonna like him, you're gonna spread that news, you're gonna show the tweets and basically spread the message of Strategy, how amazing it is. But if you're not participating in crypto and you don't hold that assets, maybe you should look more carefully at what you're buying and whether you should be buying STRC and all other products. Also, let's look at the price performance of all of these preferred stocks because they have their own price, right? So in case of STRC, here we have it, it should be pegged to $100. And you remember the moment if the price goes higher, they will print more STRC to bring it back to 100. And if it goes lower, they're gonna increase the yield on the STRC, so that brings the demand back and brings the price back. And you can see here that there are these dips. We have this one dip in August 2025, and then huge dip in November, and then another one in February. And it goes down as low to $90 and from 100, which is roughly 10% dip. And that's when the board steps in and announces this new increases in the yield. And you can see that there is not really spikes up. So where's the demand? Where is that amazing demand that's supposed to come from somewhere and STRC will be issued? We still see a bunch of STRC printed, as I showed before, from those 8K filings. But on the price chart, we only see the dips. And each time, the only way to save the situation is to hype up the yield. How much longer it can exist and continue? This exists since July last year. And what about other preferred stocks? So let's look at them. Let's say STRK, which pays 8%. And the situation is not looking very good. All we see is a continuous drawdown since July last year because we get the new stock, the new preferred stock STRC. All the marketing, everything goes now back, goes to this new one, and everyone forgets about STRK. And it's visible here, whoever was buying STRK, now they are in the loss by 41%. Yes, they still getting 8% yield, but their principal, so you have $100 and you spend that 100 on STRK in July last year, you're gonna get 8% yield. But your $100 became $40. So do you really want to get the $8 at the end of the year, but then you lost 40? So you'll be negative $32. Not such a good deal. And unfortunately, I think that that is the future with STRC as well. The moment there is a new preferred stock issued and created, you gonna get your 11% yield, but your principal gonna go down and the amount you invested, you're not gonna get at the end of the year. There are some historical examples what happens to companies who are issuing debt securities and buying assets with that. Goldman Sachs Trading Corporation, it was active in 1928 to 1932, and they were issuing these debt securities, essentially debt, and buying assets which were various loans and financial products, and they just were hoping to get that spread. So they will borrow at 1% and then they hope that they buy some assets, and hope that those assets grow at a faster rate than the interest that they have to pay for the amount that they borrow. And two things happens: either the assets go down in value too fast and they cannot pay up the rate, or the interest rate goes up and they cannot pay up because the assets didn't grow as fast. So the moment that spread closes, the company is insolvent. And since Strategy doesn't have the margin call and they cannot go bankrupt because the price of the Bitcoin goes even to zero, they still can get in trouble if the yield on the preferred stocks that they are issuing will outrun the pace of the Bitcoin appreciation. So if the Bitcoin doesn't grow 10-11%, they will be negative and they will get in trouble. And Bitcoin right now ranges at 68 to 70K, and it highest it went to 120K. And it's not guaranteed that Bitcoin is going to 1 million. Of course, as the governments continue printing money and debasing the dollar, Bitcoin going to increase in value just simply because it's denominated to the dollar. The dollar itself becomes cheaper, so the Bitcoin will be more expensive because of that. But it's not guaranteed that the interest for Bitcoin going to continue to grow. We already have companies, countries buying Bitcoin, and all of the retail already know about Bitcoin. And it's possible that the appetite toward this new digital asset is already satisfied, and we might stay at maybe 130, 180, but just as the dollar getting printed more, but not an additional growth or interest. Some of the Michael's business practices might be kind of suspicious and questionable. Let's go back to the dot-com bubble in 2000s, and Strategy was already public and already tradable, so a lot depends on the books, the accounting, the balance sheets, what we look at, and how you report numbers. It's very important because that's how the value of your company and the stock is derived. And Michael's personal wealth also depends a lot on it, because as the CEO and a founder of the company, his net worth is directly correlated to the value of the company. As a CEO, Michael oversaw improper booking of software license and service revenues at MicroStrategy in violation of the accounting standards, which prematurely recognized income from multi-element deals where future services were not separable. This materially overstated revenues and turned reported profits into actual losses. In March 2000, company announced restatements of 1998 and 1999 results, swinging from reported 20 million profit to 37 million loss. On that day, stock plunged 62% down and erasing roughly 6 billion of Michael's personal wealth, the largest single day loss by an individual at that time. In December 2000, Michael, and along with the chief operation officer and chief financial officer, they were charged with fraudulent overstating financial results in public filings, IPO documents, and earning reports from the company in 1998 IPO through early 2000s. Securities and Exchange Commission settlement without admitting any wrongdoing forced Michael to pay 8.3 million in personal disgorgement plus 350,000 civil penalty. Company paid additional fines and agreed to governance reforms, including an independent director. As a conclusion, you don't need to have PhD in economics to smell a little bit Ponzonomics in the whole strategy. And eventually, they will run out of the market and the appetite for their financial products. We already have 4 additional preferred stock securities on top of the just MSTR. At that point, Strategy will be forced to either use their cash reserves or sell some of their Bitcoin from the reserves. And the moment that happens, and that will ruin the whole narrative of Bitcoin growing endlessly, and we will always find more money to attract to buy that Bitcoin. Existing holders will start dumping all of their stocks, and that might lead into the domino effect and the market cap collapsing. Investing is about buying cash generating businesses. You're buying a piece of company that creates products and services and creates cash flows. And the price for the stock is actually cash flows in the future. Those businesses need to be solving people's problems, and the products and services is the solution to people's problems people give you money for those solutions. Strategy right now represents a wrapper on Bitcoin. It's Bitcoin wrapped in US corporation that is governed by the US corporate laws. And the mNAV right now, 0.84, that's 16%. That's how market prices those risks associated with the corporation on top of the Bitcoin. And that's how it's pricing the Bitcoin that Strategy owns, but a little bit lower because of all of those additional risks. There are a security, something might happen with the Bitcoin that they're holding, with the treasuries that they're using, something with the governance, something with the board of directors, their decision. All of that is priced in that 16% discount. Overall, Michael did an amazing thing, bringing millions and millions, not millions, billions of dollars from traditional finance into Bitcoin, into the whole ecosystem of blockchain. And we love Michael for that. But the strategy itself is not my personal favorite. If you think otherwise and you think that Strategy is an amazing investment, please let me know in the comment how you value it and why you think Strategy is a great investment and why it will carry on growing with a higher yield and my principal is not gonna deteriorate to zero. Please let me know in the comments. Until next video.